Hi, everyone. Thanks so much for joining us. My name is Denise Loria. I'm the Special Projects and Operations Manager at AFC. I'm thrilled to have you guys join us for our webinar, A Changing Regulatory Landscape, Exploring New Terrain in Financial Services and Data Privacy. I'm sure this is going to be a great panel. We had a great kickoff panel prep that was energizing and good dialogue, so I'm sure you guys are going to enjoy this. If you guys have any questions, feel free to drop them in the chat. We'll be monitoring the chat just to see if anything comes through. This webinar is in collaboration with our legal advisory member, Hudson Cook, a great partner of ours, and our panelists are from Stratyfy and AiPrise. So what I'm going to do is I'm going to kick it over to Justin, who's going to kick off introductions, and I hope you guys enjoy the panel.
Awesome. Thank you, Denise, and thank you, everyone, for joining us today. I'm going to go ahead and get us started. We'll each go through a round of just introducing ourselves, and then it'll come back to me, and I'll kick us off with our topic today. So I'm Justin Hosie. I'm the chair of Hudson Cook's Small Dollar Lending and Alternative Financial Services Practice Group. So my practice focuses on advising small dollar creditors, EWA providers, buy now, pay later providers, and LTO providers, as well as investors in those companies about compliance with various consumer protection laws. I'm going to turn it over to my partner, Meg Nicholls, now to introduce herself, and then we'll go around and come back to me. Meg?
Thanks, Justin. Hi, everybody. I'm so excited to be joining you today. I'm Meg Nicholls. I am a partner out of our Fort Worth office. I am part of our credit reporting, our privacy and data security groups. Prior to coming to Hudson Cook, I worked for a couple of different data companies, and most recently, before joining Hudson Cook, I was a chief compliance officer for a consumer reporting agency. So I do a lot of work with our clients on data, anything related to data and privacy, artificial intelligence, which we'll get into a little bit today. So some exciting topics, and I'm so excited to be joining you. Laura, I'll hand it over to you.
Thank you so much, Megan. Hello, everyone. I'm Laura Kornhauser, co-founder and CEO of Stratyfy. Prior to starting Stratyfy, now a little over 8 years ago, I spent over a decade in lending and risk roles at JP Chase. So banker first, fintech second. And what we do at Stratyfy is we help financial institutions make better, more informed decisions across credit, fraud, and compliance. What really sets us apart is our core technology and the transparency that technology provides, and how it allows its users to not just get to, if you will, the right answer or the best answer, but also know how they're getting there and know why they're getting there, which we see as particularly important in the environment that we're in right now. A big shout out and thank you to AFC and Hudson Cook for putting together this webinar. Really excited for the conversation today.
Thanks, Laura. Happy to be on the panel as well. Chaitanya here. I'm the co-founder and CEO at AiPrise. Before creating AiPrise, I was at Google working in their fraud and compliance department. So the changing landscape of regulation, talk about it, like Google being a global company, I learned a lot of things there. At AiPrise, we help enterprise companies take the challenge of compliance and solve it at the global level. Particularly KYB and KYC is where we play in. And in the today's world of data and AI, it becomes a lot more challenging as fraudsters are getting ahead and the compliance regulations are continuously changing. The Genius Act passed this past quarter is one of the most game-changing regulations that the government has accepted stable coins. So excited to be on the panel. Thank you.
Awesome. Thank you. So before we dig into the discussion, I just want to set the stage for the topic today. The topic is the changing regulatory landscape in financial services and data privacy. So it's my job to sort of level set with everyone and answer the question, where are we right now? So in very brief summary, the regulatory landscape has changed dramatically over the last year or so. We've seen the Consumer Financial Protection Bureau rescind years of guidance. We've seen enforcement actions slow to nearly a halt. We've seen a reduction in workforce at the CFPB and a newly limited budget. We've seen the Federal Trade Commission slow its activity. We've seen controversy in cases about whether the president can fire commissioners and why. We've seen courts striking down key rules like the FTC click to cancel rule. And so as a result of this landscape, we're seeing some entrepreneurial and some institutional clients getting a little more creative about their practices. And of course, we've cautioned that there are some dangers related to either falling asleep or getting a little too creative in this environment. We're already seeing some state attorneys general step up their enforcement efforts in order to try to fill this perceived regulatory void. And we're reminding clients that a new administration may view some creative efforts during this administration with skepticism and maybe with enforcement actions too. So that's where we are. And let's turn to how this impacts today's panelists. Today, we're going to discuss AI, state regulation, transparency, and more. I'm going to try to monitor questions in the chat. So if you have questions, please fire away, and we'll either get to them along the way or at the end, time permitting. So with that, I'm going to turn it over to Meg to kick off the discussion. Meg?
Hey, Justin. So you mentioned an amazing word, and we talked about it in our introductions a minute, and that is artificial intelligence. So everyone is talking about AI. Everywhere I turn, even my almost 80-year-old parents are talking about AI. So, Laura, I'm just going to pass it over to you. What are we talking about when we say artificial intelligence or AI?
Thank you so much, Megan. I think it seems like a simple question, but is actually not as simplistic as it may appear on the surface. And I would even say that confusion around this very question has led to a lot of the challenges that we'll be talking about today. So broadly speaking, AI or artificial intelligence is people usually think of it as a computer program that helps you think like humans, right? Or do the work that used to be thought of as a human work. That includes a subfield of a number of different types of AI. So that may be machine learning, natural language processing, computer vision. These are all different types of AI. And I should mention, those types of AI have been used in financial services for a long time, particularly things like machine learning, long time. And then the reason that this AI term is being thrown around so much lately is because of the advancements in generative AI. And now what we're seeing in industry is when people are saying AI, they are often taking it to mean generative AI. And that I believe to be a very big challenge in understanding of what we're actually talking about when we're talking about the technology. So generative AI, for those who have been living under a rock, is a technology that helps you generate net new things. And that's the big, I would say, difference between generative AI and what people sometimes refer to as more traditional AI, which is the other AI I mentioned. Because it allows you to generate new things, there's so much exciting stuff that can be done with it, but there's also some pretty meaningful risks that need to be controlled for, and guardrails need to be put around those risks, hence why we're having this discussion today.
Very good. So artificial intelligence, if I'm understanding your definitions correctly, has been around for quite a while. And we have recently, within the past couple of years, seen advancements where a new type or a more developed type of generative AI has come onto the market for use by a lot more people than previously was available and previously was used. So now we see the term artificial intelligence used in our products. We see it used in marketing. We see it used by the government. I think within, what was it, maybe even before he took office, President Trump was talking about really developing the United States as a leader in artificial intelligence. And so when we hear artificial intelligence, just that word, but no definition as to whether or not we're talking about the AI that creates new or the artificial intelligence that helps us analyze what we already have and become better as a company on the back end. So I think you're right. I think that's created some confusion. It's created some opportunity. And it's created some areas where I think we all need to be on the same page as to what we're talking about. So I really appreciate you setting the stage. So your company, Stratyfy, works a lot with helping financial institutions. What type of artificial intelligence is most helpful for like a financial institution, or is it everything? How are financial institutions really engaging with artificial intelligence now?
Yeah, I can start, and I'm sure Chaitanya, you have, of course, views as well. But um, I don't think there is an answer to the question of what is the best type of AI for financial institutions. AI is a tool or a type of technology that can be helpful, or in some cases cannot be helpful, depending on the problem that we're actually fundamentally trying to solve. So I think part of, again, the challenge that exists in the industry right now, and I mean this in the financial technology industry, I think the challenge is a lot of people want to use AI and are trying to find ways to use AI. I can't tell you how many conversations I have with our customers or our prospects where they say, my board says I need to use AI, or my C-suite says I need to use AI. And we talk about how that is the wrong way to set yourself up for success. Let me put it a different way. You set yourself up for failure. You should be looking to solve the problems with your business, which, I think that's what, the bankers on the call want to be doing, right? Solve the problems in your business and know that AI is one tool to do so. Now, to try to answer your question a little bit, Megan, I would say that machine learning, has a lot of value to offer. And the value has been proven, it has been tested, it has been deployed, it has been in production, it has been doing it, like on the real world stuff for things like how do you assess the creditworthiness of a potential loan applicant, which is an area we operate in Stratyfy. How do you understand if a potential behavior transaction is fraudulent? Another area we work in, right? These are places which are just machine learning is there. It's been there for a little bit. Some people still aren't using it. They need to. Right? Helps you do better with your, make better decisions, do them faster, do them more scalably, more repeatably, all the things you could ever want to do. Now, what is generative AI going to bring to the mix, and how is that going to be leveraged? I think the rules of that road are still very much being written, which I think is why this conversation is so important, especially right now. Go back a year ago, and we can dive into this a lot more, but go back a year ago and you were talking to bankers and they were saying, there's no way I'm using Gen AI in anything customer facing. That's what everybody said. I may use it for internal knowledge transfer or other things like that, but I'm not using it in any of my customer facing product. Now, the rules of the road have changed. Now you're seeing more innovative banks step up and try to find those use cases that they can use in Gen AI. Now they're not making risk-based decisions like the one I talked about earlier with ML using Gen AI, but they are, reducing customer friction, increasing customer connectivity, trying to get more personalized offers and services out to their customers. They are using, or I would say, starting to test using Gen AI. And I think that if we, have a continued period of less regulatory oversight over the coming years, we could see a very rapid pace of change within financial services that is not the normal game within financial services. Like we could be at a really different point right now than we've ever been at. Chaitanya, I'm sure you have much to say. I'm passing it over to you.
Yeah, that's awesome insight, Laura. Yeah, Chaitanya, what are your thoughts? How are your clients using AI? How are you encouraging it? What's going on in your world?
Definitely. So, like we interface mostly with chief compliance officers, MLROs at companies, usually banks, cross-border payment companies, and the newly minted stablecoin companies as well. Uh, we're from the Bay Area. We are always at the cutting edge of what's new. So what we are seeing is, as Laura really like rightly mentioned, 1 year ago, the same compliance officers would say heck no. To today, you know what? I can use it with some oversight to maybe fast forward 3 years from now. Let that thing make decisions. So I think we are seeing the tire turns pretty fast. Uh, I think if I look at the real applications for banks, uh, number one, their back office workflows. The biggest challenge that in the compliance space, a compliance officer and the compliance team usually face is the EDD or enhanced due diligence that they have to do on their business customers and even like individual customers. So, what that involves is I don't know if you have opened any account online, you would have gone through a process of document submissions of your driver's license, passports, and giving a selfie. Um, Usually it passes, but if not, it usually goes to a back office queue where there are humans looking through all of those documents along with your address proof, your online presence, and a lot of other details, and you get an account in a week. With Gen AI, these back offices are being revolutionized today. So if I look at compliance landscape, I think I'm looking at onboarding times shortening from weeks. In cases of institutional clients, let's say you're trying to onboard JP Morgan as a customer today, they have multiple entities across the world. To verify each and every entity, it usually takes months for any company. Now, I'm looking at a world where this can be done in weeks and not months. But on the flip side, if I look at from a lens of a fraudster, it gives me superpowers. Um, Mind that ChatGPT today has 1 billion weekly users. That is absolutely crazy. It's the fifth biggest website in the world. It did not exist 2.5 years ago. That kind of meteoric rise is not seen in the history. So if I look at from a lens of a fraudster, um, if I'm trying to onboard onto, let's say, a banking application, I can create a website, a completely fake website of a business, let's say a restaurant, in a single prompt. I can automate my entire journey of registration at any Secretary of State's database in the US in a single prompt. So if I look at the touch point that these banks are trying to verify in their compliance process, all of those touch points are getting automated, and I don't think there's gonna be at some point, let's say next year, you can have hundreds of thousands of these fake businesses created using automation, and you're gonna have a big compliance challenge. To really fight fraud, which is created by Gen AI, the compliance officers and the teams are responding with a counter proposal with the same thing. It's the antidote as well. That's where we play at AiPrise. We are seeing customers automating amazing policies. Let's say I am a marketplace, and which has payments involved, and I'm trying to onboard a customer. The one of the mandates that we have is go to the customer's website and see are they selling any risky products, which is, let's say, guns or recreational drugs, etc. Now, 5 years ago, even like 3 years ago, all of it was being done manually. A person would go to the website, scan, see does it look okay or not. Today, there's an AI agent which can automate this task. So we are seeing cost of compliance go down, speed of compliance increase by up to 10x, but the fraud rates are also increasing at the moment. Um, Even like the creation of fake documents, creating a completely fake bank statement just to onboard at a company, that's really possible today. So I think we feel that at AiPrise, our mission of compliance and really using data plus AI. I don't think just AI is going to solve it. You need real world data from these customers. You need people to be like on the other side of the world trying to onboard as real, genuine documents. You need much better traditional machine learning, as Laura mentioned, to actually track, hey, are these the right people? Have we seen these users before or not? So, yeah, I mean, in a nutshell, it's coming, it's gonna be here, it's not going anywhere.
Meg, if you don't mind, I see a user question that might fit in here really well. We've got two of them, but I think the first one, Meg, you might have an answer to, and Chaitanya, you touched on this a little bit, and I'm just going to read the question from Stephen here. It says, a year ago, bank regulators were highly skeptical of customer-facing Gen AI and seemed to put up pretty high barriers. What's the current position of bank regulators to customer-facing Gen AI, for example, an AI chatbot? Meg, I don't know if you might want to start kind of filling in on that, and then we can also turn it over to our panelists.
Well, yes, I would love to take a start, and I'm sure Laura and Chaitanya, you've got some thoughts as well. So I can't speak for any bank regulators or provide any legal advice, of course, on this webinar. However, one of the keys I think that a lot of folks are focusing in on, whether it's a regulator or a state AG or an attorney, a private litigant attorney, is, do I know when I'm interacting as a consumer? Do I know when I'm interacting with generative AI versus a person? So when you look at chatbots in particular, especially on consumer-facing websites, it's important to make sure consumers understand if their information is being taken in by generative AI and how it's being used, and if they're talking to a real person or to a bot. So privacy policies are really important. Disclosures and notices are really important. But almost even more important than that is that consumers understand what you're saying. So the time of having kind of the legal ease, if you will, from a privacy policy perspective, I think is in the background. And now we really need to focus on ensuring consumers not only receive disclosures and notices, but they're understandable. When they provide consent, it needs to be consent that is actual consent. So Laura, Chaitanya, love your thoughts on that as well.
Yeah, I mean, I echo everything you said, Megan. I think there has been a very notable change in the regulators, and from the regulators, we'll talk a little bit about federal versus state in a little bit, where we can talk about some of those changes that are particularly notable. But what those changes have meant is that, in my opinion, there are less people kind of minding the store and looking for these types of violations outside of everything that Megan kind of spoke about with notice to customers and making sure customers are aware. I think where that comes in to be potentially impactful in a negative way on the industry, and it goes to the last question that just came in a little bit as well from Ashley, is that you don't want to be in a situation where Gen AI is making decisions. And we are not seeing that. I'll be very clear. We're not seeing that from any of our financial institution and customers. They are not using Gen AI to make any decisions. It is a language polishing tool. It is an interface that is comfortable for their customers. And I think that's a fairly good distinction to make on where we should be using it in financial services versus where we shouldn't. It should be informative. It should help find information quickly. It should help synthesize information, but it can't be trusted to do math, right? So how are we going to trust it to make decisions, right? So that's where I think you have to be blending different types of AI technology to build a solution that then becomes really valuable and useful for a financial institution.
Completely agree with you, Laura, there. In fact, there has been no change made to SR 11.7. And that's the financial policy that every compliance officer has to follow by the regulators. That has not been changed. In fact, we are seeing companies, they don't let any of these generative AI make decisions on compliance, on privacy, or they just have an oversight on every single thing. So it's automating to some extent. So maybe if it took 3 days, now it's taking 3 minutes for the AI to come up with something. And then all you have to do is, I agree or I do not agree with that. But note that these models are not explainable. There's no auditability in those, which which creates a huge challenge, and not to mention the hallucinations where they can make up regulations of their own and say this is not the right customer for you, even though you have not any such regulation in your policy or the government's policy. Laura, anything?
I love that you brought up that point. I think that this is so essential. Um, there is this my co-founder Dimitri actually wrote a great piece called "The Illusion of Explanation" about this. But one of the things that is most dangerous about generative AI in its current form for financial services is that it can give a reason that seems convincing. So it can explain itself incorrectly in a convincing way. So that becomes very problematic if you're trying to use it as a tool to increase efficiency. Because just like Chaitanya said, right, a human's going through and saying, like, do I agree or disagree? They're not doing all of the analysis. We're using this tool to help with the analysis, the uncovering of information. So what if it's uncovering and finding the wrong information, or even worse, creating its own information as source, which does happen. It's not just, this is not just naysayers out there, saying that the sky is falling. So I think that's a big part of the technology that we still really need to figure out for it to be more widely usable in financial services and other industries.
Yeah, I love the point that you brought that up from a legal perspective, because this is so one of the things that artificial intelligence seems to create when we hear that is, oh, we need something new. We need something new here to combat this new technology. Well, encouraging folks to understand that this is a highly developed model for which we do have some past history with. And there is guidance on how we work with models from a financial institution perspective. And so let's work with that as a starting point. If you have a model risk development policy, that's a good starting point. Yes, there are additional risks with generative AI. And I think if that is one thing that is true from this panel and a message we've heard a couple of times already, that is the case. But I guess my point is we have somewhere to start with, and the SR 11.7 definitely gets us that starting point. The other piece that I thought was really insightful that came out actually the end of last year, I think, is the Department of Treasury summary of artificial intelligence, current risks and solutions. And I think that particular piece really highlighted a lot of the considerations that financial institutions need to consider, particularly when there is generative AI or when sharing of certain customer information comes into play from a GLBA perspective. So love that you brought that up. And I think that's a really good point and something to keep in mind as we chat through. Bringing us kind of back to, so we've got the federal considerations here. We've got a current presidential office that really wants to encourage development of technology, really wants to be at the forefront of creativity. And then we have states. And Chaitanya, you mentioned that generative AI and Laura, you said it as well. One of the tough things about generative AI is it can create stuff. It can create new things. And it's smart, but maybe not as smart as a human would be in certain situations. And so now we have states stepping in, is the point. We had this one big, beautiful bill that was going to preempt state law with respect to some of this new emerging technology. But in the end, that bill was the artificial intelligence preemption was removed from that bill. So we don't have a federal standard at this point. Although we do still have the GLBA, we still do have privacy rule, the safeguards rule. We need to think about all that. Now, in addition, we also need to think about artificial intelligence laws that are specific to the states where we have either a customer base or where we sit. Texas comes to mind. I'm in Texas right now, and we have an artificial intelligence law here that's focused on really helping to limit the amount of discrimination and sensitive videos and other maybe not so good for children things that could be created through generative AI. And then we have Colorado as well that's focused on high risk systems, and they need to have someone making sure that developers and deployers are aware of these risks, that they have been tested for algorithmic discrimination, another word that you might hear in replace of artificial intelligence. So there's a lot going on in the states. Many of the state AGs, even if you don't see a law in that state, have posted certain articles or guidance or opinions related to their constituents' protection of artificial intelligence, particularly in the financial space, particularly related to medical information and when children are involved. So we saw a couple days ago, it was very recently, 44 attorney generals got together and sent a letter to a whole bunch of really high-tech companies, big companies like Microsoft, that encouraged them to really think about how they can limit what their generative AI is affecting upon children. And so it discourages sexually explicit content. It discourages a child from, or encouraging a child to harm himself or to harm somebody else. Along with that, right, becomes the encouragement that because those companies have developed the technology, they're sitting in that forefront. They're sitting there in a position, and I'm speaking in the voice of the letter, but I had nothing to do with that. Just caveating that for a second, that the company who has developed the technology might be in the best position of knowing who's on the other end as a user. And how do we help protect children? So that is definitely on the mind of a lot of state regulators, from comprehensive privacy regimes to artificial intelligence specific to, if you look at biometric laws, all of the different privacy regimes we have under the states is becoming complex. And it's been complex for, what would you say, like 3 years at this point, maybe 4, 5. But we're still seeing more, and it's becoming more and more and more complex. So what do we do about this? What are your customers, what are your clients doing about this? It seems like a question we get from our clients. I'm sure you're seeing it. So Chaitanya, let me turn it over to you. What do we do about the patchwork of state regulation? How do we comply? How do we stay out of the limelight, so to speak, with a negative press release?
Completely fair question. So on customer calls, usually now what we are seeing is we have someone from legal, someone from compliance team, product team, operations team, all of them are joining and trying to like figure out how does the solution solve for my needs. And like a lot of times we are seeing that a term has come up, which is the chief trust officer. Um, so if I think about this person, what are they? They are, think of it like a conductor of an orchestra, and the musicians are the chief legal officer, the chief compliance officer, the chief marketing officer, the chief product officer, and the chief operations officer. So essentially, because everybody has their own knowledge of AI and everybody has their own knowledge of regulation. Honestly, this is not just about AI, it's about simple regulations themselves. Um, Everybody has their own mandate. The product officer wants to make sure that the experience of the customer is seamless. They have no friction whatsoever. And the compliance officer is all about make sure every single check mark is done. So They want to make sure that there's enough friction that the fraudsters or like the risky people do not go through. The operations people care about how to not have a huge operations team and make sure that we onboard as many customers as possible. And with new regulations from each state, if I am a money transmitter business and I'm trying to expand to more states, every single function in the company now needs to overhaul and comply with the local regulations of that state. So we see that there is need obviously for an individual in the company or a team in the company which brings all of these together on a piece of paper, and then people follow that um, the company's mandate when it comes to regulation and compliance. The other thing that we are seeing is compliance is not one size fits all. Like for a large enterprise which is onboarding risky customers to another one who is just onboarding SMBs, mom and pop shops across the corner, there's completely different kinds of risks involved. So we are seeing that ideally it should be trust by design, not compliance by design for each of these onboarding processes. So I think in the next few years, we'll see some of these new roles come up, which bridge the gap between what's the regulators asking for and how is my product working towards it, and how is my compliance team working towards it. Laura, over to you.
Yeah, love it, and so much. And the concept of trust is such a prickly one and a hard one to get to, and came up in one of the questions in the chat as well. I won't say trust us is the answer, but what we are, because I hear you on that. So a little bit, I'll just continue on the theme of trust, if I may, and then I do want to make a comment on the patchwork regulation, but on the theme of trust. I think this, or I believe very strongly, this is why explainability is so important, or transparency is so important. It's very hard for you to trust things that you don't know how they're working. That, I just think, is a general human thing. That said, I know very little about how this works. Do I use it every single day? Do I trust it with some of my most important information that I have? Absolutely. So I think, yes, it's great to understand how things are working so that we can trust them better. But when it comes to the generative AI, like if we're trying to get to a full explanation of how it works, we're not going to get there. Yes, we can get it to cite its sources. We can get it to show reference material. We can validate the reference material. But, one of the reasons it's cool and it works is because it's super complex and therefore not transparent. Now, if we're talking about using technology to make decisions within financial services, we often don't need that level of complexity. And this goes back to the different kinds of AI and what's actually delivering value now versus what we're talking about. And what's delivering value now is more old school AI, like machine learning. That's what we do at Stratyfy primarily in our customer-facing products, right? And having machine learning that allows for a really high level visibility into how and why you're making the decisions you're making or the predictions you're making. And ultimately, that kind of visibility or explainability into the system can help you build trust, can help you get to a point where you can feel better, giving more information over to help make a decision. So to me, it's not just about Gen AI, it's about Gen AI having a nice interface and then something that's a bit more reliable, a bit more transparent, a bit more trustworthy, actually making the decision. And then that where, going to Irene's very good question of how then do we get, people to give information to a AI system, Gen AI or otherwise. To me, we got to tell them how their information is being used. Like that, it goes to many of the things Megan was mentioning about what the regulators are asking for, right? Visibility, transparency, and how you're communicating with your customers. One of those is what are you using to make a decision about them? And what are you not using? Right? It's another thing we're really passionate about at Stratyfy, right? I should know for every single important decision I'm making about a customer. Do I give them a loan? What's the price? Do I send them into collections? Do I stop a certain behavior or interaction for fraud? All of those things are, in our opinion, very high value, high stakes decisions. and kind of sort of knowing how you're arriving at a decision is awful. You can't do it. It's not good for your business as a financial institution. It's not good for your communities. It's not good for your customers. So whether or not you're going to get in trouble with the regulators for doing it, it's not the right way to run your business. Last thing I'll just mention on this angle is the fairness side of things, and kind of what we're seeing people doing. This is where I wanted to get into the patchwork state regulation area. So one of our lines of business at Stratyfy is we have a product that helps with fair lending testing and automation, and then the search for LDAs, less discriminatory alternatives. There's been a lot of change in the last year in this space. I will say confidently that we have not seen that change at our customers, though. So our customers that were focused on this and our prospects that were focused on this and really leveraging the best in technology to get their fair and responsible banking teams to perform efficiently, transparently, robustly, they're staying with it, which I think is really important. But it has increased an additional hurdle for those compliance professionals, because now they may operate in one state that has really punitive rules and in another state that may have actually rules and going in the totally different direction. So we're seeing folks look primarily to kind of manage to the most conservative across everything, because it's very hard to cross state lines and start to do something different in the way that we're, AI and data privacy and these kind of big topics.
Yeah, those were both great answers. And I think when it comes to, from my perspective, when it comes to trying to comply with a whole bunch of state laws, I think one of the things that's important for companies to do, and one of the things that we've developed here, is checklists that will detail each of the state laws and where are the variances. If you do one thing to comply with the law over here, do you also meet the other four? So we used to do just take the most restrictive state law, you're good. Not anymore, because they all define things differently. They all have different tolerances and variances and definitions, and what is personal information over here versus personal information over there. So you find yourself in a very, very cumbersome at times situation. And oftentimes just a simple checklist can help. But that's also where artificial intelligence, models, all sorts of other things can also help from a automation standpoint. One of the other areas that I like to talk to people about, there's two. One is intellectual property and protecting sort of the artificial intelligence part of that, or the intellectual property part of what's been developed, of the model, right? And sometimes we think of that as a black box where either you, one, don't know what's going into it, or two, somebody somewhere has developed it and knows how it works, but it's a trade secret, so we're not going to release that information to you. And then talking about vendor management at the same time. So as I said before, I've worked for several data companies, and we used to have a position, and speaking generally, not for those companies now, but just generally speaking, people would come in and say, hey, show us your code, right? And at that point, we would say, no, that's our intellectual property, right? And I think that's the position of a lot of tech companies. This is how we make our business. This is our bread and butter. This is our property. Well, how do we now that we're in this age of needing to know how artificial intelligence works, how consumer information's taken in, processed, and spit back out, how it's shared, who all has access, what is being done with it, how do we provide consent for our customers if we don't know how their information's being used, shared, processed, etc. So Laura, what are your thoughts on, are banks struggling with this question too, or is maybe this is just me thinking about this overly here?
It is definitely not just you, Megan. It is a massive question, and it is a hard one right now, and one that I think is really, to exactly your point, it's the answers are changing. So as I mentioned, we started Stratyfy now a little over 8 years ago, and it was very much, we don't sell a model or a strategy. We have a technology that helps our customers, financial institutions, build a custom model in certain cases or custom decisioning strategy, fit specifically to their risk tolerance, their customer base, how they want to do business, all these things. That for us has always been an advantage because we're not selling a model or selling a score. We then don't need to obfuscate how it works to protect our IP or trade secrets or what, makes our company hard to replicate, right? So that's been helpful for us over the life of the company. Though I've seen banks find ways to get comfortable with other folks' models, but that's because they ask for very heavy documentation, not just on kind of the particular model themselves, but the process that was followed to build the model. And usually what they're looking at is call it the rubric that the vendor uses for building the model, the methodologies they use for evaluating when that model is out of date for a variety of reasons, and how they rebuild, right? And then a lot of heavy model validation, I'll say afterwards. Now, that works with machine learning. That works. I would even argue that you can give some good visibility into how the model even works, and you're going to be fine, even though people have been hesitant to do so. When we get into the Gen AI land, that doesn't really work anymore. So then you're getting into, I think, much more complex questions. And I say complex because it relates to how are you balancing opportunity and security versus cost as the financial institution, right? Sure, it'd be great if everybody could build their own, language models that were, totally insulated and they had enough data that they could still keep those updated, but it never touched the outside world or left the walls of the bank. Some banks can do this. Some banks can partner with fintechs to do this. Others can't. And so that we have a real interesting time right now where we could be in a situation with a regulatory environment a little bit lower across financial services, across AI, that we're starting to leverage this technology and kind of throwing customer data into it in a way where we don't really know what then happens to that customer data. So I think that we're more at risk with something like that happening with organizations that have not had the history of high levels of regulation like banks have. Banks know this environment is an environment we'll be in for a period of time, and then the environment will change. And they also recognize that compliance doesn't turn on a dime, right? Even though both Chaitanya and I are trying to help it move a little faster. It doesn't move on a dime, nor should it, right? There's a lot of complaints about how slow the financial services industry moves in adopting to new technology and doing new things. Some of that, yeah, it's annoying. A lot of that is purpose-built and actually keeps our financial system strong and resilient and stable. So we are at a very interesting time where we're going to have to figure out how do we keep all that good stuff of the stability that's associated with more slow as people start to move a heck of a lot more fast.
Yeah, and we got a question that I think is particularly on point right now, and that is, how do we, and I'm paraphrasing, how do we help government understand that it's safe? How do we help states understand that the technology is safe, especially when certain types of those entities are not traditionally moving very fast? And how do we help them? Is it through education? Is it through showing? How do we help? Any thoughts, Laura? I know I'm going off here on this
Yeah,
question.
I'll go real quick on it because I know we're getting close on time and probably have a lot of questions to go through, but I think the regulators are never going to get to a comfort level with the technology or not the technology. We never saw that with machine learning either. There was never some blanket approval of the technology, right? It was the technology based, and what data is it using? How are you using it? How are you making sure you're still being transparent with customers about what was used, what wasn't, why they were rejected? All of that stuff is what the regulators have views on. They'll never really have a view at least one that they'll share on behalf of the regulator on the TAC, right? So where does that leave us? What we've always done at Stratyfy is since day one of founding the company, we've been in front of the regulatory bodies. So this would be my time to call out organizations like AFC, which really help banks, fintechs be in front of the regulatory bodies. And also it would be, I'll call it my plea to everybody to say, like, don't hide from your regulators. And I think the more that we, especially right now, can be in a position where we're talking to the regulators about the things we're trying to do, I'm a believer that that will lead to positive change and positive transformation in our industry, even though it may go a little bit slower than all of us want it to go. Yeah.
Very, very good points. Chaitanya, did you want to add anything in on that or?
Yeah, I mean, just a quick thought. So traditional machine learning models were created from scratch. The Gen AI is something called as a foundational model, which there are like just three or four in the world. There's one by Google, one by Meta, one by Anthropic, and one by OpenAI. There's others as well, but these are by and large
The big
98% of
ones.
the
Yeah.
world's traffic. And all AI agents are just wrappers on top of these foundational models. So unless these foundational models themselves become better, there is no cure for this. So we are really relying on just a handful of large tech companies, where we are seeing and just trying to comfort the regulators and the customers is be honest, tell them the hallucination rates, do model validations, give them what works, what does not work. And if they are comfortable, then sell the technology. At the end of the day, like they also have massive cost ballooning, and if they see value in the technology and they're open to the risks that this thing opens up, like, and I've seen customers actually be happy because, like, before this, a lot of cases were just being not seen or not
Yeah.
reviewed. At least with this, the review rates have increased. So instead of like having a 10% review rate out of the 100, now it's close to 90, 95 in many of the cases that they thought, hey, there's going to be no fraud here, but now they are reviewing every single thing. So the the blanket is becoming bigger, the playground is becoming bigger, so are the risks. But at the end of the day, it's the regulators' calls and the customers' call. And we as sellers of technology, all we are doing is building trust in the ecosystem.
Spot on. If I may, Megan, I can't resist getting Vivek's question that's in the channel. Can we not replace an expensive rules decision engine with an AI agent? It will be so much cheaper and more nimble. Vivek, awesome question. I'll give you my strong view. So no, we cannot. And it goes back to, hey, we've all of us have worked with rules and decision engines and been really annoyed by them. They're slow, they're hard to update, they don't keep pace with change. But what's really nice about them is they are, if built right, transparent, right? A rule is a logical expression around data. Can't get much more transparent than that. And they allow for adding in of information that is not in the data. We haven't gotten a lot into the bias question here and like what happens with biases being read from bias, like bias data, bias machine propagates bias forward, makes it worse. That is a very real thing. So we need systems that can add information to a decision process that even if the information is not found in data. This is another reason why rules are good. Shameless plug. One thing that is very interesting about our core technology at Stratyfy is we blend this rules plus machine learning into one system. It's how we're able to give such high accuracy and performance and efficiency while still having real levels of transparency so you know exactly what's going on and how you're making decisions. And I think we're going to see a lot more of these kinds of hybrid systems. Whereas, for a while, the trend has been like throw out a lot of the old for the sake of new. I think we're going to start to see a lot more kind of blending of old and new to get the right technology we need to solve problems.
Yeah, that's an amazing point, and I think you're spot on that. We'll probably have some technology that just sticks with us and is tried and true, and we'll have to add in variations as we go. We're running on a couple of minutes here. I think maybe, Justin, unless there's a burning question, maybe we just go around and do kind of a final thought. What do you guys, is that okay?
I think that sounds good. You know, I've been monitoring the questions, and I feel like our panelists just did an awesome job of at least scratching the surface and answering some of the questions, even if I didn't lob them all out there, including Monica. Thank you for your recent question. I think actually the way Laura just answered Vivek's question also answers your question, hopefully. So yeah, I think it probably makes sense. I will just say, from my perspective, I thought that was really great, Meg. Thank you so much for leading this discussion. Every time we work together, I learned so much, and I just really appreciate the perspectives of our panelists too, just thinking through the different ways to deploy AI in a responsible way to help create solutions to different challenges. So thank you so much. I'll turn it over to each of you for your final thoughts.
Sure, I'll go ahead and start really quickly. I cannot help myself. Every single time I get the chance, I always tell financial institutions, please monitor your complaints. I know we haven't talked about that, but even if you need to use a model or artificial intelligence to help you monitor your complaints, because that is your golden nugget to tell you where something is going wrong from a consumer's perspective, and that will help you fix a whole bunch. Laura, I will turn it over to you.
Thank you so much. Thank you, everyone, for all the great questions. Megan, Justin, Chaitanya, it's been a lot of fun. Hour two, everyone. So many things. I'll just, John, I couldn't agree with you more on the wise lender side. And Monica, I will just say, fair lending is still a thing. It's still the law, period. So that still matters to a lot of people. And happy to discuss that more with you if you'd like. This is the time for the financial institutions in the crowd. Like, this is the time to be nimble in how you're thinking about how to leverage new technology. Don't try to leverage new technology just to check the box and get people off your back, because that will lead to bad things. But do find fintech partners that you feel you can really open up to about your real problems. I'll tell you, on the other side of the call, you'll find fintechs that are super thrilled to get an FI that will open up about their real problems, and then you can get the real solution that you're actually looking for. So that would be my call to action. Chaitanya, over to you.
Thank you. It's been exciting to be on the panel. I think just like one thought, I would say try out and don't like use them, but at least take the calls from all the kinds of new companies you are seeing out there who are trying out AI. I have myself been very surprised to see what's possible. Like gone are the days that's not possible, and they're like, oh no, it is possible. Let me show you how to automate this thing. So it's been a crazy experience. We as well at AiPrise are trying to do some of it. So if you think compliance, particularly KYB, KYC, are something you are struggling with and trying to automate, the last 30%, we can help you there. Yeah, that's all.
And reach out to us, connect. If we don't know anybody on the call, we'd love to know you.
Thank you so much. It was a great pleasure being on with both of you, and Justin, likewise. I always learn something and love working with you. So Denise, should we turn it over to you?
Thank you, everybody, for joining. I love the questions that came through. It made it so interactive, so I really appreciate it. And thank you to our panelists. This session has been recorded, so we will be sharing it. It'll be posted on the AFC website, so if you want to tune in again, you're more than welcome to. So thank you, and I hope everybody has a great Labor Day.